It was the start that President Xi Jinping had likely been dreaming of. 8 months after he said he wanted stock markets to shoot for the moon, Star Market finally launched. All 25 debutantes on the Shanghai Stock Exchange's new board skyrocketed by more than 100% as traders got their hands on the new stocks. Their listings were the first on a board created to launch China's bid to own the next Nasdaq.
Some SciTech shares that were listed in the United States earlier this year saw 70 to 80% rises on the first trading day, but some slumped below the IPO prices. But it is normal for new listings or early stages of new boards to experience large fluctuations.
The companies range from chip makers to healthcare firms, and they're one of China's boldest attempts to reform its capital markets. The idea is that could bolster China's tech sector by offering companies new routes to funding. Not all of those will be grounded in reality, though. Anji Microelectronics soared as much as 520% from its IPO price on Monday morning. Either way, analysts agree that allowing the market to allocate money is still a move in the right direction.
The general trend last year has been a lack of funding and capital for private companies that are growing very fast. So clearly there's a little bit of starvation of capital in general. They're looking for funds. The listing criteria and general requirements on the other bourses is actually quite tight. So having a bourse where you can raise capital and it's relatively easy to go and list has to be attractive for lots of fast-growing companies.
Companies can list without having to post profits, and unlike China's other major boards, there's no daily trading limit. That allows them to free float in almost the same way as some of the world's biggest stock markets do. And the people in charge of those bourses might well be worried. Some, in particular Hong Kong exchanges in clearing, have been eyeing up precisely the sort of firm that the Star Market is now appealing to. Some are worried that hotter competition between these bourses could lead to a dangerous relaxation of rules.
We hope that at some point, the institutional investors in China will pay attention to the governance issues in many Chinese companies. And paradoxically, also, if they are not doing well, I think foreign investors are going to give them more pressure to force them to look at those issues.
There are some protections for investors, though, including harsh penalties for company executives caught lying. The ultimate cure, though, for China's volatile stocks may end up being the type of big swings that Star Market has already launched. Joel Flynn, TRT World, Hong Kong.